Good afternoon, good morning, depending on where you're calling in from. Thanks for joining us today. We have an update with Sailfish to discuss their recent announcement. So with me today, I have my colleague Magda, who's going to help with some of the Q&A. And of course, Paulo Lustrito, CEO of Sailfish, and Akiva Leisman, Exec Chair of Sailfish. I think we're not going to do a presentation. If anyone's new to Sailfish, there's plenty of videos on the Adelaide Capital YouTube channel that you can check out to get an overview of the company. This will really just be an update on Spring Valley, as well as some of the other royalty streams and projects, but will mostly consist of a Q&A. So anyone that wants to ask a question, feel free to enter it in the Q&A box at the bottom. And even though we're not working off a presentation, this presentation will contain forward-looking statements. If you'd like to have a look at those, you can find them on the company's presentation on their website. With that out of the way, I'd like to introduce Paulo and Akiva, who are going to give us a little bit of an overview on the last release. Hi, guys.
Hello.
Hey, Eden.
Nice to see you.
So thanks very much for everyone to attend. Good morning, everyone. We're super pleased to announce in yesterday's press release that there's been a very important development with regards to one of our key assets. This is the royalty that we have on the Spring Valley Gold Project in Nevada. We did a bunch of work in terms of having a group go in and speak to the BLM. This is in Nevada. And what we found out is that the operator has filed a plan of operations at the asset. And the most important part about this is the scope of that project is much larger than what we had originally anticipated. And that has direct implications in terms of the value to Sailfish shareholders and what that would mean in terms of cash flows to Sailfish once the project is up and running. So in terms of actual size and scope, if you look through the press release that was announced yesterday, you're basically looking at a project that has over 300 million tons of mineralized material that'll be processed over the course of 13 years, that the annual mining rate, this is including waste, is contemplated in and around 100 million tons a year. This is much larger than what we were originally looking at. It's almost a double, if not triple, in terms of size and scope of what we were originally. And all of the mineralization that is going to be mined in the current plan that's been put forward to the BLM is on ground where we have a royalty of up to 3%. And there's a map in yesterday's press release that gives you a sense of size and scope in terms of the breakdown of where the NSR is located. So, Akiva, I don't know if you want to add to that before we go into Q&A.
Well, I think for those that are new to the story, I think it's kind of important to go over a little bit of the history about how Spring Valley came to the position and the royalty, for that matter, where it is today. So this was a relatively new discovery made in Nevada 20, 30 years ago. And it was optioned off to a junior mining company called Midway Gold, who then in turn wound up doing an earn-in agreement with Barrick back in the early part of the 2010s. The earn-in agreement required that Barrick spend, I believe, $30 million of exploration capital to go and earn a 75% interest in the project. And Barrick wound up accelerating that spend. It actually became kind of a core asset within the Barrick Nevada development cycle in the previous iteration, so the prior to the merger with Randgold. The asset, when it was originally vended into Midway, had a few royalties associated with it, going to various, coming from various different prospectors. The core royalty, which makes up the substantial majority of the contemplated open pit plan, was originally discovered and vended in by a family named Schmidt. And at one point, this was a sliding scale 7% royalty. So even though this is a sliding scale, the the maximum gold price that was contemplated in that sliding scale arrangement was $700 an ounce. So usually when we have our public disclosure, we consider this to be a 7% royalty, because if gold's going less than $700 an ounce, we have bigger problems to worry about than the development cycle of Spring Valley. And then after Barrick earned into this, there was another public company called Terraco Gold. And they had a very innovative way of acquiring a key portion of the Schmidt royalty with my former alma mater, Red Kite. Now, Red Kite did this transaction before or after I left them in 2011. But the way that transaction worked was that 5 of the 7% of the royalty was acquired simultaneously by Red Kite and Terraco. Half of that 5% went to Red Kite directly, and then the other 0.5% was financed by an equity and debt contribution from Red Kite to Terraco. In the ensuing year or so, another 1% of the royalty was subsequently acquired. And then a few things happened within the portfolio. For those that are familiar with the private equity space in the mining community, Red Kite split into 2 organizations. So one was also named Red Kite, and the other one became an extremely large private equity firm called Orion that was in the project finance and royalty business. And Orion wound up selling their royalty portfolio to another publicly traded company called Osisko Royalties. All right, so here we actually have a few things that wound up happening. Red Kite, prior to the split of Orion, wound up retaining their 2.5% interest. Half of that additional 1% royalty that was retained went with Orion, which then subsequently went to Osisko. So now you have the ownership of 2.5% over at Terraco, 0.5% over at Osisko, 2.5% over at Red Kite. The Orion portfolio was sold to Osisko, which is how they acquired the 0.5%. Around the same time, the Red Kite finance package from Terraco was refinanced by another private equity firm who wound up acquiring the Spring Valley asset from Midway and Barrick when Midway declared bankruptcy and Barrick was in a divesting mode back when their balance sheet was stressed in 2014. So this private equity firm called Waterton, through their subsidiary Solidus, which was the name that we referenced in the press release, the owner and the operator of this asset, wound up controlling Spring Valley as a project and wound up having a convertible debt piece over at Terraco, which was used to refinance the Red Kite loan. That convertible had the option of buying back a portion of the royalty. All right. So Waterton owns the asset. You have, at this point, 0.5% of the royalty owned by Osisko, 2.5% by Terraco that had a back-end right going to Waterton, and then Red Kite has the other 2.5%. Fast forward, Sailfish, the company that Paul was the CEO of, I'm the executive chairman of, decided to acquire Terraco. That was back in 2019. And the controlling shareholder of Sailfish wound up refinancing the Waterton debt held over at Terraco such that there was no more back-end options. At that point in time, Sailfish had a 3% royalty coming from this the Schmidt royalty. Red Kite had 2.5%, and then Osisko had 0.5%. Within a few days of us acquiring the Terraco company, Waterton wound up acquiring that last remaining 1% from the heirs of the Schmidt family. So at this point in time, we consider this royalty to be cut down from a 7 to a 6% because Waterton is now retains that royalty interest. Then fast forward the clock, 2 years later, Osisko acquires the Red Kite royalty. So now we have 2 organizations. You have Osisko Royalties, this multi-billion-dollar royalty company that has half the now 6% royalty, and we have the other 0.5% over at 3%. Throughout all this time, since Waterton acquired this asset in 2015, there has been a lot of work that has been put onto this property. Now, granted, they are a private firm, and is their choice not to publicize all the information that they've done. But they've done an extensive drilling program, an extensive permitting program, an extensive engineering program, an extensive land management, water management program over at the asset, to the point where it's now been advanced, where the current schedule that they have in their plan of operations is indicating that this is going to be permitted for construction in the early part of the second half of next year in 2024. Now, one of the things that is not within the public domain is the feasibility study associated with this asset. That does not mean that a feasibility study does not exist. There's been brand name engineering firms. SRK handled the major part of the plan of operations over here. And they do indicate a 323 million ton of quote unquote ore going into a heap leach project, the high grade being a single stage crust and everything else being run of mine material. There's a 2-year pre-strip associated with this as well. But there is a feasibility study going in the background. So even though we don't actually have reference to how many ounces are within this project, we do know that there's 323 million tons of material. And the last time that there was a public resource associated with this was back when Midway and Barrick had it. And the last time that a grade was calculated was somewhere in the neighborhood of about 0.63 grams per metric ton. So if you take 323 million short tons and apply that grade, which again is a complete guess, although it's an educated, good starting guess as to what the grade would be, that would imply that this project has almost exactly 6 million ounces of material going through that heap leach. A 6 million ounce deposit in Nevada that's going to be permitted in 2024 has a value well in excess of a multiple of our market cap. Which is one of the reasons why we've been very active in terms of, we just announced a buyback that we're going to be buying back 5% of the shares. Insiders over the company have been very active in repurchasing shares associated with it. We have paid 8 consecutive quarters of a 1.25 US cent dividend, which even at these prices equates to about a 7% dividend yield associated with it, all buttressed by cash flows coming from other assets within the portfolio. And we're basically looking at the market, and it's just giving us a gift, because a private company acquired this in 2014, and there was an information vacuum. Again, their choice, their prerogative to do that. And because there hasn't been a steady flow of public market information about this asset, people have simply forgotten about it. It does not mean the asset hasn't been advanced. That doesn't mean that tens, if not hundreds of millions, maybe not hundreds, but $100 million of capital has been put in it to de-risk it to the point where it is right now. And it doesn't mean that this isn't going to get ready to start going into construction by next calendar year. It's not going to stay this way. And to the extent that the market is going to give us credit for it, great. And we can probably do other stuff with our royalty vehicle. To the extent that it's not going to give us credit for it, great. It will give us an opportunity to go and acquire all these shares that we have at a substantial discount to what we think is our implied NAV, which, like I said, I can say with a straight face that I view it very unlikely that if people start valuing this as a real 6 million ounce deposit that's going to be permitted in Nevada by next year, I find it very difficult that our NAV is going to be anything less than substantially more than US $3, maybe Canadian $3 a share.
And if we jump into some Q&A?
Yep, that makes sense.
All right, so we're going to start with an audience question. I think you kind of spoke a little bit about this. Can you please put a potential dollar value range on the Spring Valley royalty?
Yeah, I mean, we've seen comps that have traded like this. And again, I want to reiterate the fact that this is in Nevada. It likely will be permitted. I think there's still some de-risking items that need to be added. Frankly, I think it's going to be helpful if this asset is owned by somebody other than Waterton, and not because they don't do great technical work. In fact, we've had the communication with BLM and NDEP, and they were very laudatory about the technical effort that was put into this 850-page plan of operation that they put together. And they do have the team, if they wanted to go and develop what is essentially going to be a multi-$100 million CapEx project for this asset. That being said, I don't think they actually want to build it. So I do think that when when this either gets permitted or even potentially before, the likely builder of this asset will be a large-scale mid-tier or a major mining company. If and when that happens, I view it very unlikely that a royalty of this size and scope for a project like that, again, held within Nevada, and at that point in time, being owned and operated by a major, will trade for less than US $200 million. I just don't see how the math would work any other way. You can have pushback on that valuation, and I'm glad to go through some of the analysis that goes to that. But we have enough market comps for royalties that exist in jurisdictions like this, where that's not a crazy number. Now, there's a lot of caveats that kind of came with that valuation and the path on how to get there. Is that, all right, that needs to be permitted. The plan of operation was submitted in March, and you have a letter of technical adequacy from the BLM, but it still is going to require at least another year before this gets fully permitted. That's a de-risking item. And then what I think is going to be the main one is that you're going to need to have a large mid-tier or major mining company that will own it. At that point in time, it takes any risk associated with being able to finance it and eventually going through the construction mode of the asset. And then, as with any project, any mining project, there are always operational risks that come with this. So the lodestar valuation is that US $200 million number, which equates to just in its own right, Canadian $4 a share thereabouts. But I don't think it's worth that right now. I think you're going to have to start cutting it based on risk, and people can have different views of how much you need to cut based on the risks and the attributes that exist today.
You got to remember as well that I used to cover the royalty space. And so an asset of this size, of this quality in Nevada, in a vehicle like the larger royalty companies, is going to command a massive premium. And so, as Akiba outlined, as the box get ticked, this asset's going to be valued multiples of where we're trading at right now.
I had a follow-up question, Akiba or Paulo. So in terms of this asset potentially getting sold, do you think that if a major were to buy it, they would attempt to buy back part or all of the royalty associated with it?
You would think so. I mean, to me, like, the crazy part about all of this, I kind of alluded to it in my long spiel about the history of Spring Valley. At one point, Waterton had an option with that convert to buy back 1.35% of that 3% that Terraco owned. It made no sense to me why that was never exercised. And we went to this situation where it was literally on the afternoon that we were going down to the Vancouver, British Columbia courthouse. We get a note from Waterton issuing a letter of default to Terraco. So literally on the way to court to exercise that, to consummate the actual merger over there, we get this letter of default. And then I wind up talking to principal over at Waterton, like, what are you doing? Do you want to get repaid or not? And then they said, we want to get repaid. I said, fine. So I had Wexford write a $12 million check to Terraco the Monday morning, and we repaid Waterton. And it was astounding to me that I really did think that they thought they were going to be putting Terraco, because they had a secured convertible on this, into bankruptcy to acquire that 3% royalty on the cheap. And ever since that happened, it was kind of like a mind-boggling exercise about why they actually let that happen. And then over time, you had my former alma mater Red Kite own this. I don't think they actually had like a real. I don't think anybody really had like a great view on what this asset was worth beyond just the strategic value where it was located in Nevada. And at the time, my understanding of the situation is that at the time when the Orion and Red Kite split, there was a certain valuation that was attributed to it on the Red Kite portfolio. And really the moment that somebody actually gave them a cash check for this royalty, because the core business of Red Kite at that point in time was not underwriting royalty acquisitions. As soon as someone gave them the number, they wound up selling to Cisco. A couple of days, if maybe a week after we acquired Terraco, Waterton, the first thing they did was call up the rest of the Schmidt family heirs to see if that 1% was still available. And I'm sure they did a great deal on the acquisition over there. So we're always in communication with the other royalty companies. Like, by the way, nobody knew about this, right? So like Waterton has kept this pretty silent. It's 100% it's public information. It's not on anybody's website, which is why it's a little bit difficult to get. So you had to like physically go down to the office and physically ask for this public information just to confirm it. And it's not like Franco was aware of where this royalty was. It wasn't like, I don't want to speak for the other royalty companies, as Cisco or anybody else. We're aware about how advanced this project really was. And this was kind of how, in our estimation, Waterton was trying to handle the advancement and the sales process over here. Is they wanted to keep control of the information as their prerogative, and hopefully it works out for them. But I have been shaking my head like throughout this process about how many missed opportunities there were for them. I'm not aware of any royalty company that has an equity stake in Sailfish at this point. It's mind-boggling to me the lack of tactical forethought. If I was still a portfolio manager over at Wexford, this would not how we would behave when we were talking about the acquisition of strategic assets. We would own a 9.9% interest in this particular company to have it told. We would make sure that we would never get rid of our buyback options and things of this sort. And every step of the way, I shake my head at some of the tactical mistakes that were made by affiliates of this project or even some of our competitors.
It seems crazy that they wouldn't try and buy back the royalty before putting out the plan of ops, which they knew would be publicly available. I don't know. Well, if you're right on your theory that
is a fundamentally different thing. If they call us up for a price now, the price is not going to be something that makes sense for them to generate private equity returns, right? So this is a royalty. It trades at a premium. I think most of the trades that have happened, certainly for producing royalty assets, if you actually take into account real life operating results, they trade at a premium to, forget about NAV, premium to NAV zero, if you actually wanted to honestly value some of these royalties that are in existence. So I don't begrudge the private equity owner for reaching out to us now. What I shake my head is that they had the attributable valuation on that buyback right when we acquired Terrico, and they let it slip because they thought they can put them into bankruptcy, and we just did not let that happen.
Meg, did you have some questions?
Yeah. So the next audience question kind of sums up a couple of them nicely. How long does production working out technical issues to cash flow take in the state of Nevada? If construction starts next year, how quickly could operations and cash flow begin?
Oh, we never said that construction was going to happen next year. I think Akiba said, like, if everything worked out perfectly, that the permits would be in hand next year. The other part of the component, again, you have to go through the NEPA process, and there's a public consultation process. So there's a very open process in terms of, but this is Nevada's a mining state. People understand mining in Nevada. The project's location is right north of the Rochester mine. So people in the area already know and have an understanding of what mining is in this part of the world and the economic benefits that come from mining. So once you get all the permits in place, the next part of it is making sure that you have the required capital in order to execute on the project. And so from a cash flow perspective, if everything goes right, a project of this size is probably an 18-month conservatively timeframe once the permits are issued. And then that's when you could start to see cash flow. And it would probably be a ramp up because you're looking at different leach kinetics depending on where you start. I don't know if Kiba, if you wanted to add anything to that.
Paula brought in a couple of good points over there. We'll get back to the leach kinetics in a bit, but a lot of this plan of operation, I think we did actually an excellent job of summarizing this very long document. So it was well over 800 pages, and I think the key punchlines were well described in the press release. But still, a lot of this is reading tea leaves in terms of what's there, because this was not a feasibility study. So it's like, what exactly was in the plan of operations that we can sort of suss out what the deposit's going to be about. So they spoke about 323 million tons of ore, obviously predicated on the assumption that these are reserves, but 323 million tons of ore. They spoke about roughly 1.3 billion tons of overall material moved, inclusive of alluvium and waste, over the course of 13 years of a mining project, which included anywhere from 18 to 24 months of what is effectively pre-stripping both alluvium and waste. There's a lot of numbers there. So you have 323 million tons of ore. We have, quite honestly, no idea how many ounces of gold that equates to, but using the measured and indicated grade from the last public 43101 from Midway at 0.63 grams per metric ton, that equates to roughly 6 million ounces of gold. One of the, I think, key, let's call it operational risks associated with this asset is that there was a subset of the ore body that had coarse gold associated with it. The plan of operations does not take into account, or they're not deciding to permit a gravity circuit that goes with this. So there will be the high grade will be going through a single stage crush, and everything else will be run a mine. And then, given the fact that there's no gravity circuit, as Paula was alluding to about leach kinetics, one of the things that happens with coarse gold, like putting a lump of sugar in your tea versus kind of it's called confectioner's sugar in your tea. You put confectioner's sugar in your tea, it turns sweet really quick. You put a lump of sugar, it turns sweet over time. So the same thing happens when you apply low concentration cyanide solutions on gold. If you have coarse gold, it takes longer to do. So I think there's going to be a ramp up. I think there's going to be, based on our understanding about recoveries and what the plan is, and then just how heap leach mines work in general, I don't think it's crazy that there's going to be certain years where this is going to be producing in excess of 400,000 ounces of gold as an average production, given the fact that this is a 13-year mining schedule, and there probably will be a residual tail for production going forward. The average may be less than 400,000 ounces, but I do think that there's going to be certain years where this will have a forehandle on production.
Thank you. And one last question about permitting. So given where the permitting is now, like how much longer can it be expected before it's fully permitted for construction? And what needs to happen?
So I kind of I alluded to it a little bit earlier. The NEPA process is a public consultation process to see if there's any concerns from the public in terms of the plan that's being put forward. It can be an iterative process, but if everything that's described in the plan of operations checks off all the boxes and that there aren't any issues from a public consultation process, it can be very quick. The reality is we're probably going to look at anywhere between sometime next year to at the latest, I would imagine early the following year.
Yeah, so again, it's not our project, right? So we have the royalty, but we don't actually have the actual mine, the project over here. So the only thing that we have to go on is what's in the public domain. As part of that 850-page plan of operation that we were able to get our hands on, this public document, they did issue a likely schedule for getting the record of decision, which is about 12 months from now. You don't see any, and by the way, with the context of us actually having the conversation with people over at BLM and NDEP, saying that Solidus did an excellent job preparing this document. So we have those two things: a plan of operation where a letter of technical adequacy was given, and then we have the context saying, "Good job, guys! You should be proud of the work that you did." With a schedule that lists next year as the record of 12 months from now as the record of decision date. Could it slip beyond that? Of course, this is permitting in the United States, right? So that's always going to be a risk associated with the project. But when we're talking about guesses, the best guess that we can have right now is what was listed in the schedule without any real pushback from the regulators at this point.
Thank you. And I think Deborah has more questions.
I've got a few, and there's some audience ones that I'll work in as well. So moving beyond Spring Valley, let's talk about some of your other assets. So the stream that's currently funding Sailfish's dividend is Mako's San Albino. I know we're doing a webinar next week, Akiva, which will give you a chance to do a very thorough update, but maybe you could give us a little bit of an update on what's going on in terms of cash flow forecasts, production forecasts, focus of the project, et cetera. I'd say maybe keep it to a couple minutes, and if people want more, we'll get them to tune in next week.
Right, sure. So Sailfish has three things on, might actually have four things on Mako. So it had the 3% effective stream on the 3.5 square kilometers around the San Albino mine. It had a 2% royalty on the rest of the grounds that made up the land package as it existed in 2018 when Mako was created. It has two remaining gold payments of 205 ounces left that we pay in the form of silver for technical reasons associated with our inclusion in a silver index. And then it has a silver stream of 24 payments of 13,500 ounces of silver per month, and an option to acquire the life of mine silver production for an additional $1 million after those 24 months are over. So we're going through a couple of transition points. There's the contractual transition point is that we only actually have two payments of that gold payment left. So that will then get transitioned into the 13,500 ounce per month silver payment. Then we have the second transition where about a third of the run of mine diluted vein material has been coming from San Albino. So the 3% royalty stream. We're in the final touches of putting up our maiden resource over at Las Conchitas. I put out a press release on Mako's behalf this morning, kind of alluding to the fact that we have an initial 5-year open pit mine plan and a substantial underground resource that's going to be coming on top of that. All of that is associated with the 2% royalty. And then for the first year of that operation, it probably will be about 60-40 coming from Las Conchitas, the 2% versus the rest over at San Albino. So there will be a down drop in terms of the royalty percentage that Sailfish is owned just because of where this is being mined. And then when that resource is out, and to the extent that I can actually put out some wonderful infill results over at the Las Conchitas North area this morning, I'm going to put out some additional, even better ones in the next few weeks. And then I think investors are going to have like a reasonable understanding as to what the life of mine cash flows will be over at Las Conchitas. And they'll have even a better understanding of that when the resource is out later this quarter.
Okay. And then can you talk a bit about the silver stream specifically and related party deals in general?
Sure. So let's rewind the clock to last year. And then I'll talk about this from both Sailfish's and Mako's perspective. So Mako was having some operational issues, metallurgical issues, really starting in February of 2022. And then we solved a lot of them. It was a pretty decent effort by our full operating team, all hands on deck, to try to take a very complicated ore body, not just geologically but metallurgically as well, and get it running, and getting it running better than it was. And we had a lot of successes in doing that. And then it did hit me from Mako's perspective that in order for us to have like a much lower risk profile, we needed to do a couple of things. One, we really couldn't be managing ourselves with the balance sheet that we had at the time because there was still a bunch of debt that was owed to the controlling shareholder. And I didn't want to get that refinanced. And secondly, we were actually actively looking for other other projects and acquisitions at the time, and we were very, very close to executing on one with the announcement. I think most people who watched my Beaver Creek speech in September of last year knew that I was like hinting that something was going to be coming up close. And literally within a week of us putting something on paper to acquire the other side, we got hit by the Nicaraguan sanctions, which from an operational perspective didn't really affect anything at all. From kind of a market valuation perspective, it changed things quite a bit. So it became clear that Mako needed to do something with its balance sheet on that side. And likewise, Sailfish got hit by a positive lightning bolt at the end of last year, which came as a shock to everybody. And that was in December. It became clear that that dividend that we had, so that US 5 cent a share dividend, is not going to be sustainable on the current balance sheet that we had over at Sailfish at that point in time. And we were thinking about, did it really make sense to cut it, or could we do something, either finding other deals or even a related party, a transaction like you spoke about from Sailfish's perspective? Did it make sense to do something to make sure that dividend was going to get preserved? And we thought about kind of where we were in the on the Spring Valley side. We weren't aware of any plan of operations at the time. The only thing that we were hearing was rumors, that we knew that dividend was going to be important just to compensate people from the time and the wait, knowing that there was a vacuum of information that occurred ever since the actual mining project was acquired by a private company back in 2015. And then, completely unexpected, our stock just decided to double, like in the course of 3 or 4 days. And I had no idea why, until somebody told me. He's like, hey, Kiva, did you see what happened with the SILJ ETF? It's like they did this crazy rebalance where their largest constituent in the index was Turquoise Hill. It was acquired for cash by Rio Tinto at the end of December, and a day before the rebalance needed to be executed, and all of that cash just needed to be redistributed to the constituents in the index. I had no idea Sailfish was in the index. Like we were the second smallest component within it. It had 4 basis points of allocation to it, and then because of the Turquoise Hill acquisition by Rio, our allocation went up from 4 basis points to 8 basis points, and it caused our stock to double. So I found out this news while I was on a plane going on a family vacation, and I was like, it was a 12-hour, 10-hour flight, wherever it was. So I had a chance to actually read the prospectus pretty closely. I said, you know what, this is something that we can reposition the company around. So we had some pretty extensive conversations with the index manager, and we said, if we turn Sailfish into a pure play silver company, would you wind up, according to your methodology report, tripling our allocation in the index? And he said, the way that I read it, absolutely. So we said, all right, let's take care and kill like all 15 birds with the 2 stones that we had over here, which was we had the ability to refinance Mako's balance sheet that not only helped get through the operational issues, but also helped fix our balance sheet when we're in discussions with acquisitions from Mako's perspective, puts it into a self-amortizing instrument that just makes sure that the loan gets repaid over a visible timeline. Then you have on the Sailfish end, you do the 2 main things that you have, which is the maintenance of that dividend and being a pure play silver producer to get you the triple allocation of the index. And it worked exactly as planned. We would not be able to pull something like that off if it wasn't for the related parties over here. Now, we've gotten some pushback and feedback from shareholders on valuation about whether this part was good or this part was bad. Paulo can attest to this. I had nothing. I had a lot to do with like suggesting that this was a good thing to do for Mako and Sailfish. But from a valuation and a pricing perspective, you got to blame that guy, Paulo. He was totally responsible for having Sailfish get the good terms that it got.
And at the end of the day, you have to understand that we, as an independent board member and as an independent manager, I'm looking out for one entity and one entity only, and that's Sailfish. And so we went through all the technical due diligence. We went through all the risk assessment from the standpoint and made sure from a risk adjusted perspective that we got an acceptable rate of return. And we just did the math yesterday because we had to do this discussion with our auditors, that the deal is more than 6% better than what we signed way back when because of the forward curve and how it's moved. So it's a great deal for Sailfish.
And then from Mako's perspective, I can say two things: is that night and day in terms of flexibility. And like Wexford's a great shareholder to have. Don't get me wrong; they're fantastic. Having a lender over there that's not Wexford, not a controlling shareholder, not a dominant shareholder on the equity side, is unequivocally positive, I think, for Mako. The flexibility that we have in terms of how the loan is repaid, the length of time that we have. At the end of the day, the Wexford facility had to be pushed back a couple of times, and it was going to go current. We were going to have like a very substantial negative working capital hit because it would be less than 12 months maturity. And this way we took care of a lot of that like balance sheet, certainly at least optics, but even from a reality perspective. So I can say unequivocally, Mako was benefited by the flexibility and the accounting of this particular deal. And then even in our discussions with some of those companies, and in fact, the one that I was talking about from last year, we're still in discussions with. They basically said, "Yeah, this is like an infinitely better situation for us to be involved with than it would be if the Wexford loan was left intact."
Okay, and can we get an update on Gavilanes and Commonwealth, please?
So I guess what we're referring to is the original plan that was announced almost a year and a half ago when we were talking about Swordfish and Swordfish being spun out. The problem with Swordfish wasn't the assets, it was the market's willingness to fund exploration. And as a result of a lack of money coming into the space to support silver exploration, that's basically shelved the whole plan with Swordfish as it stands right now. Now, we are busy working behind the scenes to try to extract value from Gavilanes, and we'll hope that we'll be in a position over the course of the next, I'm going to say 3 months, to update the market on that front. But we're working hard to make sure that we're bringing value to shareholders.
Yeah, and the only thing that I'll add, to the extent that it is monetized, 100% of the net proceeds will be used for the 3.5 million share NCIB that we have. That valuation is less than what we think are fair value, which I kind of alluded to. I think even today is above $3 Canadian.
In Commonwealth?
So as Paulo alluded to, the plan to put this into a shell vehicle was left alive for a couple of years. It was predicated on us raising a minimum amount of capital of US $5 million, which was not a minimum amount of US $5 million from somebody that was not named Wexford, right? So it really needed to be done from a non-affiliated company for a variety of reasons, original listing requirements, proof of valuation, and things of the sort. Throughout the entire cycle, both up and down, at our maximum, the book had outside capital of about 2, right? So it just shows you kind of like the nature of the financing over here. It was nothing to do with valuation. Right, we wanted to get this out, and if we have to price something on to get something out relatively cheap, knowing that you're going to be maintaining the balance and eventually getting to a higher valuation later, that we're usually very practical when it comes to situations like that. There just wasn't capital available, so we did have to publicly announce the dissolution of that trade. So the Commonwealth asset was held by Wexford; it still is privately. And then on the Gavilanes side, it's always been maintained by Sailfish. And then the real intent over here is to try to monetize it as best we can to get as much value as possible as we can. And to the extent that we have cash, all of that cash is going to be used to repurchase our shares as much as we can up to a level that we think is fair value, which in my mind is in excess of Canadian $3 a share.
And is there any work being done on either project right now?
So from Paulo can talk to the work that we did over at Gavilanes in the last couple of years.
Yeah, so we've done extensive amount of trenching and sampling, basically extending veins along the surface and also getting an understanding of the third dimension because there is a bit of a vertical profile. We've done extensive geochem, regional geochem, and interestingly, there's a lot of gold that's starting to show up at Gavilanes. So we've moved the project forward. It's drill ready. We have permits in hand to put drill holes into it, but it's not the job of a royalty company to do exploration work. And so, like I said, we're busy working with a potential partner here that would, one, advance the project, and two, allow us to realize value in multiple ways for Sailfish and Sailfish shareholders.
Yeah, that's right. I mean, even the history of why this is in Sailfish was not because it was Sailfish's intent to own an exploration asset. It's because in the 2018 creation of Mako, that required a contribution from Sailfish, a renegotiation of the stream that they needed to be compensated for. And so the asset was a small part of the compensation that Sailfish got in order to restructure the stream. Apollo is 100% correct. I mean, put this to you in as explicit language as I can. Not not triple X explicit, but direct language as I can. Royalty companies should not be financing exploration companies and exploration assets. Exploration assets are some of the highest cost of capital deals, and sometimes it makes sense to invest in exploration because you can have these huge successes, and that's great. But the reason why royalty companies exist and why they are successful is because when they're done correctly, they will have a low cost of capital. If you wind up mixing the two together, you will lose on both ends. Now, we have a lot of competitors out there in the space that don't do that and don't follow this model. And they invariably will wind up stubbing their toe by doing it. Royalty companies should be royalty companies. Exploration companies should be exploration companies. There's nothing wrong in investing in exploration, just needs to be done with the right type of capital. Nothing wrong with royalty companies, just needs to be invested with the right type of capital. But when you mix the two things together, you're going to lose.
So what does the future of Sailfish look like? Do you intend to add royalties to the portfolio, producing or exploration royalties? Are you looking at specific jurisdictions? What's the overall plan?
It can be anything, right? So the problem with where we sit right now is that our valuation is such that I have not seen a transaction that came across our desk that we could execute on. That was accretive. I think we put in, I don't know, Paulo, what do you think? Like 4 offers on the table? I think that's probably right. 4 or 5.
4 or 5, and contemplated several others, but yeah.
We were outbid by everybody by a factor of, at a minimum, 50%, and then I think on one it was like 150%. There's not a single one where I was like upset missing it at our price, let alone the price that the other royalty companies paid for. So the choice of us buying back stock versus the royalties that were in existence, at least available to us, and obviously that changes when we have different access to capital, both in terms of price and quantum. I had a long chat with the controlling shareholder a couple of days ago, and he said, "Yeah, like, is there anything interesting out there?" It's like maybe we should be a royalty company. But for those that don't know, it's like Wexford started actually one of the largest royalty companies in North America. It just doesn't happen to be in gold, so I doubt many people on the phone know about. But one of the spinoffs of one of their E&P companies, Diamondback, is called Viper Energy Partners, and it's a royalty that I think royalty company that at its peak was probably spinning off close to $270 million of royalty cash flows US. Traded as initially as an MLP and now as a C corp, like dividending out like a huge amount of capital every single year. It was a tremendous success. So Wexford knows the royalty business very well, and then we kind of look at the types of assets and availability and kind of landscape that existed in oil and gas mineral trades. And then you compare it to some of the stuff that was done on the gold side. It's always been a head scratcher. And I think one of the reasons why you have this dichotomy is that we have such an insular market where like everything is just, it's kissing your sister to a certain extent in the gold space. So everybody talks to other gold investors and they look at gold assets. They think like the leaders of the royalty world are these tremendous companies. But then you look at them and some of the mineral companies on the oil and gas space, it's just, it's not comparable. So where that leaves us is that there's virtually nothing that we can do that's accretive with our stock trading where it is right now. That changes when our stock's at or above fair value, which I estimate to be in excess of $3 Canadian. At that point in time, if there's availability of capital, great. love to be the business. If we sell the Spring Valley to a large royalty company, great, happy to do that. Happy to keep it. Happy to finance it to extend our dividend, expand our dividend. Happy to hold it until it starts cash flowing. We can do whatever makes sense at the time. We're not beholden to anything, and a lot of these decisions really are predicated on what exactly does the pipeline look like, and it was not very strong. And what exactly is the availability of capital and at what price, which was not very attractive. And then hopefully that will change.
The only thing I'll add to that, Deb, is that, at the end of the day, you've got, someone like Akiba and myself that have, a lot of capital markets experience. And the idea here is that we're going to do what's right in terms of making shareholders money, right? And, you've got Wexford as a major shareholder. They own over 60% of the stock. So we're going to do what's right to make.
Perfect. You just answered my last audience question too, Paula. So thanks for making me not ask it. I have one last question for you before we go, as we're coming up to the hour. Just in terms of what investors can expect to see out of Sailfish over the next 12 months, maybe you could list some potential catalysts.
Yeah. So I think the first thing that shareholders should look to is the extension of the dividend. So we announced that already, and you got the silver stream that's going to backfill that. And then as Mako, and you're going to have the webinar, I believe it's next week, as that information and the transition to Las Conchitas and the cash flows from that asset start to come to the forefront, that'll also de-risk Sailfish from that perspective. We feel comfortable because we've done the technical due diligence, but that's not in the public sphere just yet. So as Akiba, kind of puts that information out there, people will start to get a better sense of why we think that's a good deal. And then in addition to that, and we kind of alluded to it earlier, doing something with Gavilanes in the form of taking that asset and converting it and putting it in the hands with a capable group that can advance it and move it forward, and using some of the assets that get monetized there from the sale of that asset to buy back stock. The stock is stupid cheap. Couldn't put it any more simpler than what we've done today.
Okay. That's all the questions that I had and all the questions Meg and the audience had as well. Is there anything that you wanted to talk about today that we didn't cover?
I'm happy to basically put out an open-ended invitation. If anyone has a follow-up question or they want to have a more in-depth discussion after the fact, happy to do so. Just feel free to reach out. We work for shareholders and no shareholders too small, and happy to have that discussion.
Great. Okay. Well, thank you for taking the time to give us an update, and thanks to the audience for participating. As Paula said, if anyone has any questions or wants a call, feel free to reach out. We can set that up for you. And yeah, looking forward to getting a full update on Mako next week, Akiba. So see you then. And nice to see you both.
All right, take care, Deb.
Thank you.